How to buy 10 rental properties in 1 year using the BRRRR strategy. Welcome to Property Profit Investing, where we make real estate investing approachable and profitable. Today's episode is a deep dive into a powerful strategy, how to buy 10 rental properties in 1 year using the BRRRR strategy. This is not just theory, it's a practical roadmap to financial freedom. If you appreciate the information on our video, go ahead and be generous, and don't forget to hit the like and subscribe button. So, let's get started. Understanding the BRRRR strategy. First off, BRRRR stands for buy, rehab, rent, refinance, repeat. It's a cycle that turns real estate investing into a powerful wealth-building tool. We're going to walk through each step and show you how to apply the strategy effectively. The vision: financial freedom at 40. Begin your journey with a simple question, usually asked by a mentor. At what age do you want the option to work or not? My answer was 40, with a dream of $15,000 per month in passive income and a debt-free lifestyle. To achieve this, the math was clear. I needed about 10 rental properties, each yielding approximately $1,500 per month. Setting your goals. Your goals might be different. Maybe it's early retirement, college funds for your kids, or just financial security. Whatever it is, define it clearly. This clarity will be your driving force. Phase 1. Accumulation. Building your credit and financial foundation. The first step is creating a strong financial base. You need good credit, aim for a score above 720, and a steady income. If your current income isn't enough, consider side gigs or additional jobs to boost your earnings. Starting with your first property. If you're a first-time buyer, leverage programs that allow low down payments. This could be your stepping stone into real estate investing. The idea is to live in the property, possibly rent out a portion, and then move on to your next purchase. Scaling up. Investment properties. Once you're comfortable, it's time to aim higher. Investment properties typically require bigger down payments, 20 to 25%, but they're a critical part of growing your portfolio. Focus on acquiring properties that offer good rental yields and potential for appreciation. Understanding the market. Research is key. Understand the neighborhoods, market rents, and the type of properties that attract tenants. Networking with other investors and real estate professionals can provide valuable insights. The rehab process. Rehabilitating your property increases its value and rental potential. Focus on cost-effective improvements that offer the highest returns, like updating kitchens and bathrooms or improving curb appeal. Renting smartly. Finding the right tenants is crucial. Screen your tenants carefully and set competitive rents. Good property management, whether done by you or a professional, keeps tenants happy and ensures steady rental income. Refinancing to grow. Once a property is rehabbed and rented, it's time to refinance. This step frees up capital that you can reinvest into more properties. Work with lenders who understand the BRRRR strategy and can offer favorable terms. Repeat and grow. With each successful cycle, your confidence and skills will grow. Repeat the process, learning from each experience and refining your strategy. Phase 2. Payoff. The snowball effect. As you acquire properties, start focusing on paying off mortgages. Use rental income to pay down the first mortgage, then move to the next. This snowball effect builds momentum, reducing debt faster than you might expect. Dealing with challenges. Real estate investing isn't without its challenges. You'll face market fluctuations, unexpected repairs, and sometimes difficult tenants. Stay informed, adapt your strategies, and always have a contingency plan. Diversification and risk management. Don't put all your eggs in one basket. Diversify your investments across different types of properties and locations. This spreads risk and offers protection against market downturns. Building a team. Successful real estate investing often requires a team. This includes realtors, contractors, property managers, and financial advisors. Build relationships with professionals who understand your goals and can contribute to your success. Leveraging technology. Use technology to your advantage. Property management software, financial tools, and market analysis apps can streamline operations and enhance decision-making. Understanding taxes and legalities. Real estate investing has its own set of tax implications and legal considerations. Consult with tax professionals and legal advisors to ensure compliance and optimize your tax benefits. Long-term vision. Keep your long-term goals in sight. Real estate investing is not a get-rich-quick scheme, but a journey towards financial independence. Patience, perseverance, and smart decisions will get you there. The final payoff: achieving financial freedom. Once your properties are paid off, you'll have a substantial passive income stream. This is the point where financial freedom becomes a reality. Imagine waking up every day with the choice to work or not, with a steady flow of income from your investments. This isn't just a dream, it's achievable through disciplined investing and smart strategies. Evaluating your progress. Regularly assess your portfolio's performance. Are your properties appreciating? Are the rents in line with the market? Adjustments might be necessary as you grow. Regular evaluation ensures that your investments align with your long-term goals. Scaling beyond 10 properties. Once you hit the 10 property mark, don't stop if you're still driven. Scale up, but do it wisely. More properties mean more management and potentially more risk. Consider diversifying into different types of real estate, like commercial properties or multifamily units. Creating systems for efficiency. As your portfolio grows, so does the complexity of managing it. Create systems and processes for efficiency. This includes everything from tenant screening to maintenance requests. Efficient systems save time and reduce stress. Building equity and wealth. Real estate isn't just about cash flow, it's also about building equity. As your properties appreciate and you pay down mortgages, your net worth grows. This equity can be leveraged for further investments or as a safety net for the future. The power of networking. Networking is invaluable in real estate. Connect with other investors, join real estate groups, and attend seminars. These connections can lead to partnerships, deals, and invaluable advice. Continuous learning. The real estate market is dynamic. Stay informed about market trends, new laws, and investment strategies. Continuous learning keeps you ahead of the curve and opens up new opportunities. Balancing risk and reward. Every investment comes with risk. Understanding and managing risk is crucial. Don't over-leverage yourself, and always have a plan for market downturns. Balanced risk management ensures long-term sustainability. Lifestyle design. Real estate investing isn't just about money. It's about designing your lifestyle. Whether it's traveling, spending time with family, or pursuing hobbies, financial freedom offers choices. Keep this in mind as you build your portfolio. Retirement planning. Real estate can be a significant part of your retirement plan. The passive income from rental properties can provide a comfortable retirement without relying solely on savings or pension. Leaving a legacy. Consider the legacy you want to leave. Real estate can be a valuable asset to pass on to future generations, providing them with financial security and education in wealth management. Dealing with market cycles. Real estate markets go through cycles. Learn to recognize these patterns and adapt your strategy accordingly. Sometimes the best move is to hold on to your properties, and other times it might be the right moment to sell or buy more. Creative financing. As you grow, traditional financing might not always be the best option. Explore creative financing methods like seller financing, lease options, or partnering with other investors. These can offer more flexibility and potentially better terms. The role of technology. Embrace technology in managing your properties. From online rent collection to digital property management, technology can streamline operations and improve efficiency. Sustainability and responsibility. Consider the environmental impact of your properties. Investing in energy-efficient upgrades not only reduces costs, but also contributes to a sustainable future. Responsible investing is becoming increasingly important to tenants and the community. Personal growth. Real estate investing is a journey that can lead to significant personal growth. The challenges and successes along the way teach valuable lessons in finance, management, and resilience. Mentorship and giving back. As you gain experience, consider mentoring new investors. Sharing your knowledge and experiences can be incredibly rewarding and help strengthen the real estate investing community. Preparing for the unexpected. Always have a contingency plan for unexpected events like property damage, economic downturns, or personal emergencies. Being prepared ensures that you can weather any storm. Celebrating milestones. Don't forget to celebrate your successes along the way. Whether it's acquiring your first property or reaching your income goal, each milestone is a step towards your ultimate vision. The final word: it's possible. As we conclude, remember that buying 10 rental properties in a year using the BRRRR strategy is not just a fantasy. It's a well-trodden path to financial independence. It requires dedication, smart planning, and a willingness to learn and adapt. Whether you're just starting or looking to expand your portfolio, the principles of BRRRR can guide you towards achieving your financial dreams. Stay focused, stay disciplined, and most importantly, believe in your ability to succeed. There you have it, a comprehensive guide to buying 10 rental properties in a year using the BRRRR strategy. And if you haven't done so already, hit the like and subscribe button. By all means, leave a comment and I will respond. And turn on your notification bell so you don't miss out on any of our videos. This will help us grow our channel. Thank you so much for watching, and until next time,